Anybody that tells you it's just one thing, it's just mortgage rates, it's just jobs, it's just prices. It's not. It's a number of different things that kind of go into pricing, because there are a lot of sellers right now who don't understand that the market has changed, don't understand that comps from 6 months ago don't matter anymore. Sellers that don't understand that to move their property, they need to price their property lower than what's available on the market right now. But there are going to be a certain percentage of sellers that aren't ready to hear what you're trying to tell them. There has not been a better time to add a cash offer to your seller option than today. Welcome, everybody, to Agent Investor. I'm your host, Tom Caffarella. This is the only brand, Agent Investor, that helps real estate agents diversify their income away from just being a real estate agent. If you have anxiety over the next 90 days, whether or not your listing is going to close, whether or not your buyer is going to step up to the plate and make an offer or close on a deal, this podcast is for you. The goal of being an agent investor is to diversify your income away from just earning commissions. There is nothing wrong with being a real estate agent. I'm a real estate agent myself. I've got a brokerage of over 400 agents, but I highly, highly encourage real estate agents to not just sell real estate, but also invest in real estate by following what I call the agent investor model. I believe that all agents should not only sell properties, but also fix and flip, whether you do them on your own or if you partner with us through our partnership program, and invest in long-term assets that pay you each and every month. Today's topic is going to be one that is very specific to what's going on in the market today, which is the question: why are listings sitting right now? And as I'm recording this is the end of October 2025. I doubt that if you're listening to this a month later or 2 months later, I doubt that there's going to be any big change. Typically, very typically, not always a guarantee, but typically once market shifts, they tend to kind of go in that direction. And, I've been in real estate now for 20 years. I got my real estate license in 2005. I've been through the full gamut of the real estate cycle. 2005 was kind of similar to the past 5 years, where no matter how much inventory went on the market, it went away immediately. And then I went through the period that the economic crisis from 2008 to call it like 2011, 2012, where inventory was piling up, where people were losing their jobs, and all the way back to today. So we are seeing a shift in the market. There is a shift in the market, and I'm talking, regionally in greater Boston, anywhere from, 2 hours outside of Boston. But I also know that there are shifts happening all over the country. Okay. Not every market is the same. If you're listening to this in another market, your market might be a little bit different. I'm going to talk a little bit about what I'm seeing in my market. I'm going to talk about what's likely happening in a lot of markets. But more importantly, it's great to get educated. It's great to, hear, the answer to the question: why are listings sitting if we have a supply shortage? It's great to know that academically, but I'm assuming that you guys are going to want to do something about it. Like, you're listening to this podcast. I hope that you're somebody who likes to get educated, somebody who likes to learn. But I hope more than that you're somebody who likes to make money and shift your business and change your business and adapt your business so that you're profitable, right? So, to the question, why are listings sitting if we've got a supply shortage? Because we definitely don't have an enormous amount of volume of properties that are going on the market, right? We could definitely say that this inventory that's sitting is not kind of coming, gangbusters out there. It's not like there's a million listings a week in each, town. There's a couple that are getting added, but they're starting to pile up. So why are they piling up? What's going on in the market? It's actually a really simple answer. And the answer is supply and demand. Supply and demand is the most powerful economic indicator that exists, period. If supply is low and demand is high, prices go up and listings get taken off the market. Supply has been low for a while. Demand has been high for a while. Demand in a lot of markets across the country has been really high. Even when mortgage rates went up, demand was still high, right? And the opposite is also true. If supply is high and demand is low, prices go down. So again, getting back to the original question, why are listings sitting if we don't have a ton of supply going on in the market right now? Well, the answer to that question, if we look at it from a supply and demand lens, is that the demand is down. The demand is lower than it's been, you know, in a long time. I can't remember the demand being this low. I can't remember a time in a while where we've put flip properties onto the market, gotten a ton of showings, had people that are interested enough to show up, but not necessarily interested enough to place an offer or to place a solid offer. Never mind an over market offer, which is something that we've had going on for quite a while. So it begs the question, what changed? What actually changed? And just to say this for a second, there is no one economic indicator that you can look at when it comes to prices or when it comes to supply and demand. And I did a presentation on this early on, probably 10 years ago at this point, on the factors that influence real estate pricing. Anybody that tells you it's just one thing, it's just mortgage rates, it's just jobs, it's just prices. It's not. It's a number of different things that kind of go into pricing on whether the houses are sitting or not. Um, yes, unemployment, as an example, plays a big role. Yes, supply and demand, plays a big role. Yes, demographics and demographic trends and shifts play a big role. But they all play into the role, and they're all forces that cause prices to either go up or down, cause inventory to sit or to come off the market really quickly. So let's talk about kind of, the buildup to why listings are sitting right now. Like what has been happening in the past 4, 5, 6 years. Let's go all the way back kind of to 2020. Back when kind of COVID hit, people started, working from home more and mortgage rates were really, really low. Let's just go that far back just for a second. So we had a big shift in what was happening in people's lives. COVID happened beginning of 2020. A lot of companies went to work from home temporarily or permanently. And a lot of Americans across the United States felt like they needed to either own a home, like they didn't want to rent in an apartment building anymore, and or they wanted more space. Yeah. At the same time, mortgage rates, the Fed funds rate got slashed to zero. Okay. Fed fund rate slashed to zero. Mortgage rates were 3%, 3.5%, somewhere in that range. So in the beginning to middle of 2020 and into 2021, we kind of had a feeding frenzy. And I'm sure those of you who have been in the industry for a while remember what that was like. I mean, inspections were waived. People were offering $20,000, $30,000, $40,000 over asking. People didn't really care what they were paying as long as they could get a mortgage. And that pushed prices up really high. It also took inventory off the market completely. I mean, again, as somebody who fixes and flips over 100 houses a year, we were the beneficiaries of that. We put a property on the market, call it like on a Thursday, and by Monday, we'd have a handful of offers to choose from, Most were over asking. Most were waiving inspections and waiving other contingencies. What changed in that 5-year period is that in 2022, inflation, the inflation readings, the CPI, the Consumer Price Index went way up. Inflation hit roughly about 10%. Don't quote me on the exact number, but it was around 10%. And mortgage rates went from being in the threes all the way up to almost 8%. Now, if you were just to kind of look at this and say, well, how do mortgage rates, if mortgage rates are the only thing responsible for demand and pricing and whatever, you would have thought that real estate prices would have come down. I mean, how can the market absorb interest rates that are now, 2.5 times what they were just a year before? In 2021, mortgage rates were in the threes. In 2022, they touched 8 at one point, but were mainly in the sevens. But prices didn't come down. Why? Going back to the original point, supply and demand. There was still huge demand and there was still limited supply. So from 2022 to about the middle of 2025, we had a situation where prices of everything were rising. Prices of real estate were rising. Prices of goods were rising. Jobs were pretty good. People did get raises, nothing astronomical in general. But people were getting paid a little bit more. There was low unemployment. Demand for houses were pretty high. And then sometime, I'm going to call it, in my market, your market's different. It's probably not that different, but it's probably a little bit different. Sometime in the middle of 2025, buyers just kind of changed their mindset. And sentiment is a big thing. Emotional sentiment is a big thing. All of the sudden, and it came quick in my market. If you're listening to this in a different market, it might be a little bit different. But all of a sudden, buyers kind of felt like, prices are high. Mortgage rates are relatively high. My payment's going to be relatively high. I haven't maybe gotten a big raise in a while. And I think in the future, prices might come down and mortgage rates might come down. So if I'm not going to get a deal on a house, I'm probably just going to be patient. Now, we had just gone through a period of 5 years where buyers in general were extremely impatient. They were extremely impatient. Then all of a sudden, boom, shift. Shift happens. Buyers are now being patient. They're now saying, you know what? Well, I want to buy a house now. But if I don't buy a house now and I wait, I might get a better deal. The market's falling, or my perception is that it's falling, and rates are falling. Rates are no longer 7, they're more like 6, and maybe they'll be 5 soon. Now, perception and sentiment and how people feel, we could argue if it's, if they're right or wrong. We could argue that, but it doesn't really matter because sentiment is driving behavior. And it was interesting because during the 2020, 2021 boom, many people that weren't buying houses thought that buyers were wrong then. Well, geez, they're going to regret waiving their contingencies and they're going to regret, paying these prices. But the sentiment of the buyers was, I want a house now. I don't care. I'll figure it out later. So what we have right now are buyers being really patient, really cautious, having inspections on everything, coming back after the inspection saying they want money off. And this is the new norm. And this may continue. We may be in a market that's falling. It may continue to fall more. We may be in a market where it's kind of temporarily dead. Maybe it can come back to life. But what we have right now is a little bit of a standstill. And to go back, I talked about, I'm not super old, but I have been through this cycle. I'm 43. And I remember the point that we're kind of at right now. And I remember the year and what it was like. And it's not going to be exactly the same, but that year was 2007. In 2007, I remember going on listing appointments. And I remember sellers thinking that the market was still hot. I remember sellers thinking that the pricing was still going up. And I personally took a bunch of listings at prices that I couldn't sell them for. Now, I didn't know it at the time. I was 2 years into the business. I still kind of thought, well, you get a listing, it's automatic money. What I found out was that you can actually lose money taking listings. I never thought that was possible. But in 2007, you had a lot of sellers who did not want to price their property according to where the market was at then. And it was kind of a thing where you'd go out, you'd have a listing appointment. And if you didn't list it for where the seller wanted, you weren't getting the listing. However, on the flip side, if you did list it at where the seller wanted, you weren't going to make any money. So we saw a lot of expired listings into 2007, into 2008. And I know we're going to see that again. I can tell already. I don't even have to look in my MLS. I know we're going to see that again because there are a lot of sellers right now who don't understand that the market has changed. Don't understand that comps from 6 months ago don't matter anymore. Sellers that don't understand that to move their property, they need to price their property lower than what's available on the market right now. It is a tough pill to swallow. There are also agents today who don't understand this. There are agents today that don't understand this. So with all of that being said, in my podcast, I don't make projections. I don't make predictions because predictions, they can change, whatever. But the thing is, like I said, I hope that you guys didn't just come on today. I hope you're not listening today just to hear that part. Now, this part about like what's going on in the market, what changed, etc., why it changed, it's just one component. The more important component is now that we've shifted, we have absolutely shifted. Now that we've shifted, we've shifted. If you're in the market and you're selling a lot of properties or you're trying to sell a lot of properties or you're working with buyers, now that we've shifted, what are you going to do about it? Right? Because doing things the same way in a shift is going to end up making you less money. There's a book called Who Moved My Cheese? It's a great book. I'll summarize it for you in about 60 seconds. The book's about a mouse in a little like maze, and they put the cheese in the same place every day. And the mouse figures out where the cheese is, and then every day they go to get that cheese. They go in the same spot. They get fed. They're happy. One day, who moved my cheese? The cheese moved. Now the mouse keeps going back to that same old spot, and there's no cheese there. That's kind of where we're at today. Now, if that mouse doesn't try to figure out where that cheese is now, where it's moved to, and keeps going to the same spot, they're not going to survive. Same way real estate agents won't survive unless they make some changes. So what is going to change for agents, in the next, 3, 6 months, year? And what can you do to be ahead of it? Like to actually take advantage of this? Well, the first thing that you need to change now more than ever is you've got to get your sellers to price their properties correctly. And again, pricing your properties correctly, you used to be able to go back and say, what did a property sell for 6 months ago? What did a property sell for a year ago? Now, you've actually got to look and you've got to say, what does the price of the property need to be the best price property, the best available property on the MLS right now? Which is going to mean in 9 out of 10 cases that you're pricing it lower than a sold comp. Okay. So that's hard. That's really hard. It's hard to get sellers to understand that. I would focus with them on what's available. Get to educate them on what's going on. Get them to understand that they need to be the best price property right now in order for it to sell. And show them what's available. Right? Like anything else, if somebody goes shopping, they've got some money to spend. Any buyer, whether it's a real estate buyer, whether it's somebody out, shopping for shoes or clothes or shopping for anything. They're going to shop and they're going to figure out what the best deal is, what the best value is, and they're going to buy that. You've got to be the best value today. Doing that's going to take a lot of work. Now, the problem, and this isn't like the best news ever, is that there are going to be agents that you're going to be competing against. In some cases, they're just going to be like, oh, no, market's still good. I can get you that price. And then there are going to be expired listings. So you just have to be aware of that. Like, taking a listing right now is not going to be the guaranteed income that it was 6 months ago. It's just not. Unless you get the seller to understand the pricing, unless it's priced right, and unless the seller's flexible. And if they are, great. But there are going to be a certain percentage of sellers that aren't ready to hear what you're trying to tell them. So a lot of listings are going to become expired listings, unfortunately. Second thing is, sellers are now going to need to sell to investors more. Okay. There have been, in the past 5 years, there have been a ton of sellers, who actually did need to sell fast. They did need to sell with no inspection contingency. But in the past 5 years, there's been a lot of retail buyers that have been able to offer more and almost give them some of the benefits of a cash buyer. I guess if you list a property on the MLS in the last 5 years, and the buyer waives an inspection, and the buyer gives you a really good price, and sometimes they might even be waiving the mortgage contingency. Well, shoot, like, why would a seller sell to a cash buyer when they can get more money from a retail buyer, and the retail buyer is giving them like some of the benefits of the cash? However, that's going to change. That is changing. Buyer sentiment is changing. I haven't had a waived inspection on one of my flips in a while, like months. So what does that mean? Well, that means that inspections are going to come back with issues, especially in New England. I mean, the average house in New England is 60, 50, 60, 100 years old. Some of them are older. So we're going to have sellers now that are going to have a need to sell to a cash buyer that they can't get that same offer on the MLS like they've kind of been accustomed to. We're also going to have properties that are sitting longer, right? You may have a seller that needs to sell in the next 90 days. And from 2020 to 2024, you could say, well, you know what? We'll put it on the MLS and we're going to get you that to the finish line that quick. And most of the time you could. So with that being said, there has not been a better time to add a cash offer to your seller option than today. It's going to give you a value add. Some of your sellers are going to take it. Some of your sellers are going to list their property and then a week or 2 or 3 weeks later, or after an inspection, come back to you and say, you know what? I do want that cash offer. Now, if you're working with us and you're going to partner with us, now we can buy that property, we can renovate that property, and we can split the profits 50-50 with you, right? For those of you who don't know about our agent partnership program, make sure that you jump on my on-demand webinar at www.partnerwithagentinvestor.com. Again, that's www.partnerwithagentinvestor.com to learn how to get a cash offer on every single one of your listing appointments. That is now going to be more of a value add than ever. And in fact, for the first time in a really long time, I had somebody who had their house on the MLS come back to us and say, hey, I had an agent come back to me and say, hey, would you make an offer on this house? Property was on the MLS. I said, normally I don't do this, but are your sellers really serious about taking a cash offer? The agent told me yes, and now we're buying that property. Okay. All right. So Fourth thing that's going to change is that buyer transactions, unfortunately, are going to be harder. They're going to be longer, they're going to be harder, etc. Buyers now have the mindset that they're in the driver's seat. Again, whether this is true or not, like we could speculate, we could debate, we could argue, whatever. Buyers are in the mindset that they're going to get a deal. They're going to make sure the inspections go well. They're going to put in offers, at whatever price they want. But most importantly, the issue is they're willing to wait. Yeah, of course, there are going to be buyers who can't wait. But there are more buyers than ever that are willing to wait. That willingness to wait gives buyers leverage. Well, that's great. That's great for the buyers. Buyers have not had leverage in a long time. But what that means and what we're seeing is that buyers are more willing to back away from a deal. They're more willing to not put in an offer. They're more willing to put an offer below asking. They're more willing to back out after an inspection. They're more willing after an inspection to make a demand. And if they don't get it, then they don't buy the property. So what does this mean for agents? Unfortunately, this means for agents, it's going to take more time, energy, and effort to get a buyer contract, right? So all of these things temporarily are not necessarily great news for traditional agents, right? Listings not being guaranteed, your buyers taking longer, your buyers willing to back out. Like, back 2-3 years ago, if your buyer got a property under contract, it was like, they felt like, I can't ask for anything. I thank goodness I got this offer accepted, and now I'm just going to get this to the closing. It doesn't matter what happens at the inspection. So with all of this changing, I can't stress enough, it is more important than ever to diversify your income away from just being an agent, right? And we teach and train on the agent investor model. We teach and train agents how to partner with us, how to offer cash offers to your sellers, how to invest passively, right? You can still be an agent. You should always be an agent, right? But you should be an agent investor. To learn more about how to do that, go to www.partnerwithagentinvestor.com. On that call, we're going to teach the agent investor model. We're going to teach you how to diversify your income. We're going to teach you how to do it today without spending a whole bunch of extra time every week. You don't need to spend a whole bunch of extra time. You just need to know what being an agent investor is. You need to learn how to identify deals. You have to be willing to offer your sellers a cash offer. You have to be willing to work with us. Well, I suppose you don't have to be willing to work with us to be an agent investor. You can get all the information from the webinar, and you don't need to work with us. But I think you would benefit from working with us. When you do work with us, by the way, you don't need to be a part of my brokerage. You do not need to be in a coaching program. All you need to do is watch that video, learn about the simple things that you can implement right now. And you can do that in a very brief period of time. The webinar is now on demand, which means you can stop listening to this and you can listen to the webinar right now. You can listen to it when you get home. You can listen to it whenever it's convenient for you. So again, go to www.partnerwithagentinvestor.com to listen to that webinar. And if you'd like to meet us in person, you'd like to meet me and my team in person and find out when our next in-person event is, go to www.agentinvestorevent.com. We do a lot of in-person events. The most recent one is always going to be up at www.agentinvestorevent.com. All right, guys, market shifting. It is super important to do something about it. Take action. Do not be left behind. Make sure you're diversifying your income. Make sure you're taking those steps to work with your sellers and your buyers better. All right, we'll be back again soon. Thank you for tuning in.